Next, Amazon and Apple woes, Google versus Facebook, and more support for research in motion. First up, Amazon. Is the e-commerce giant losing a step on its rivals? The company currently doesn't collect sales tax in many states. That gives it a big advantage over traditional retailers who do. But strapped states like California and Texas are now forcing Amazon to collect sales taxes. And sales growth in California is now suffering, according to new research by Channel Advisor. If so, this is bad news for Amazon and good news for retailers like Best Buy, Walmart, and Target. Amazon stock would really take it on the chin if there's even a hint that sales growth will slow. It trades about 150 times estimated earnings. The Pacific Crest upgraded to outperform today. Shares are roughly flat. More iPad concerns for Apple. Sources telling Reuters Sharp has nearly halted production of screens for the full-sized iPad as demand shifts to the new iPad mini. Sources didn't say how much of the slowdown was due to seasonal changes in demand or consumers opting for the smaller iPad mini, and sources were unable to characterize Apple's overall tablet sales. Reports earlier this week indicated Apple cut part orders for its iPhone. Shares down about 1%, near $500. Google CEO Larry Page is not impressed with Facebook's offerings. In an interview with Wired magazine, Page says that Facebook's strong in the social space, but, quote, they're doing a really bad job on their products. Page seems to have a short memory. His company's got a similar track record. Remember Google Wave? In the best of our rest, a company riding a wave of bad news, Intel. The chip giant reported sales of around $13.5 billion. That's the same they reported last quarter in a fall of about 5% compared to the same period last year. What's worse, Intel says sales may fall in the next quarter. The problem's pretty simple. Intel dominates the market for PC microprocessors, but it hasn't made much of a dent in cell phones and tablets. Meanwhile, PC sales are shrinking. In order to catch up in mobile, Intel's investing heavily. It now says it plans to spend $13 billion on new plant and equipment. Investors weren't happy, sending the stock crashing 6%. No wonder. Heavy investments mean less cash to return to shareholders in dividends and buybacks. And Intel's attempts to crash the mobile market have been repeated failures. The real risk is a huge chunk of Intel's business is disappearing, and the company will waste bigger and bigger piles of cash trying to keep up in mobile. I'd stay away from this fading chip maker. Soaring and sputtering time. Our look at the movers. First, soaring is research in motion. Jefferies raised the BlackBerry maker to buy from hold ahead of the debut of its make-or-break BlackBerry 10. It also boosted the price target to $19.50 from $13. Shares up 6%, near $16. And sputtering, Wipro. U.S.-listed shares of the Indian IT services firm down nearly 7%. The company projected sales growth that was slightly below analyst forecasts. That's Techquity this Friday. Remember, you can follow us on Twitter at @RTRS Techquity. I'm Rob Searin. This is Reuters.